Is the UK economy collapsing? If you've been reading the headlines, you'd think we're on the verge of disaster. Rising debt, sky-high taxes, record levels of welfare spending, and now even whispers from legendary investors like Ray Dalio that something worse than a recession might be coming. But here's the truth. While the UK isn't doomed, it is at a crossroads. And if you don't understand what's happening, your savings, your income, and your future wealth could be quietly eroded over the next decade. Today, we're going to break down why the UK economy is struggling, what the government is doing wrong, and most importantly, how you can protect yourself before inflation and debt spiral out of control. Chapter 1, the reality. The UK is struggling. Let's start with the obvious. The UK economy isn't doing very well. Our national debt is now at 100% of GDP, and the interest on that debt alone is costing the country £105 billion per year. That's not paying the debt off, that's just the interest. And guess who's footing the bill? You are. The average UK household is paying around £4,000 a year in taxes just to service government debt. Money that's not going into schools, hospitals, or infrastructure, but simply vanishing into the pockets of lenders, many of them overseas, where still 1/3 of all that interest is leaving the country entirely, going to foreign investors. That's money draining out of the UK economy. And it's a major reason growth has stalled. If this type of video resonates, hit the subscribe button to learn all about money and investing. Chapter 2, why high taxes are killing growth. Then there's the tax problem. The UK now has some of the highest tax burdens in decades, and history is crystal clear. High tax economies grow more slowly. In places like North America and Asia, where taxes are lower, economic growth is faster, investment is stronger, and innovation thrives. But in Europe, and particularly in the UK, higher taxes discourage work, kill animal spirits, that natural drive for entrepreneurship, and make it harder for small businesses to grow. And here's the thing, even the people setting tax policy know it's a problem. Former Chancellor Jeremy Hunt admits that taxes were raised after the pandemic temporarily to stabilise the markets, but they were never brought back down. So now we're stuck in what he calls a tax doom loop. The government raises taxes to pay off debt, which slows growth, which means less tax revenue, which means they raise taxes again. Round and round we go. Now, as always, nothing in this video should be taken as financial advice, and the full disclaimer can be found below in the description. Chapter 3, debt doom loop. Paying for yesterday, not building tomorrow. It's not just taxes, the UK is also trapped in a debt doom loop. Think about it like a household mortgage. If you borrowed too much and most of your salary went to interest payments, you'd have nothing left to improve your home or build wealth. That's exactly what's happening at a national level. We're spending billions every year on interest payments instead of investing in new industries, technology, or infrastructure that could actually grow the economy. And as Ray Dalio warns, countries that don't deal with their debt eventually face something worse than a recession. Even the United States, with its reserve currency advantage, isn't immune, and the UK certainly isn't either. Chapter 4, the welfare trap. Paying people not to work. Here's where things get even more concerning. Right now, a quarter of working age adults in the UK are not in work. Around 11 million people and about 1,000 people every day are being signed off as too ill to work. Not just too ill to work, but too ill to even look for work. Most of these cases are linked to anxiety and depression, but the system is broken. Once someone qualifies for certain benefits, they risk losing that income if they recover. So many people become trapped in long-term welfare dependency. This isn't just bad for the economy, it's bad for people. Social contact, purpose, and routine are all proven to improve mental health, yet the system discourages people from seeking them. And it's costing the government tens of billions every single year. If we simply reduce the welfare bill to pre-pandemic levels, we'd save nearly 50 billion annually, enough to avoid many of the damaging tax hikes that are suffocating growth. Chapter 5, the political paralysis. So why isn't anything being done? The short answer, politics. Many in government still believe they can borrow their way to growth, a model that might have worked 30 years ago, but doesn't work in a high debt, low growth economy. There's also an outdated mindset that higher taxes and more spending automatically lead to better public services. But when so much of that spending goes to debt interest and welfare, it doesn't actually improve productivity or living standards. And the longer politicians delay real reform, tackling debt, cutting unnecessary spending, incentivising work, the worse the problem becomes. Chapter 6, What You Can Do. Here's the truth you won't hear from most politicians or newspapers. You can't control government policy, but you can control how prepared you are for what's coming. If the UK continues on this path, we're likely to face slow growth, persistent inflation, declining purchasing power, higher taxes, and possibly a major economic correction. But the people who come out on top in times like these aren't the ones who panic. They're the ones who own assets. When governments print money and devalue currency to pay their debts, cash loses value. But assets like stocks, real estate, businesses, and even certain cryptocurrencies rise in price because they're priced in that same declining currency. Assets are how the wealthy protect and grow their wealth during inflationary times. And if you want to safeguard your financial future, that's exactly what you need to be doing as well. Summary. In my humble opinion, the UK economy isn't doomed, but it is broken. And while politicians argue about taxes and spending, the real cost is being paid by ordinary people through higher prices, shrinking savings and lost opportunities. Inflation is the silent tax. It punishes savers and rewards owners. So don't be a victim of the system. Become an owner. Start learning how to invest. Build a portfolio of income-producing assets and take responsibility for your financial future. Because the government certainly isn't going to do it for you. But after all that, you're not quite sure what to invest in now. Well, if you see below, you'll find a recent video that gives you 10 options to invest your first £1,000.